Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, December the 21st. The year's 2018. Let's talk trading. Weekly wrap up. This week, I know you used stellar money and risk management. There's no question. I just know you did. Okay, the euro yen once again broke out of the lower monthly wick zone and is now 22 pips, 21 pips off the bottom. So anybody taking that trade right now be up about 74 pips. Simple trade. And the Euro AD did not fill the gap. I didn't think it would. It's almost 400 pips above the weekly open and it gapped up. Remember, it missed that fill by about 1 pip. So it still would have been a profitable trade. Back to the euro yen, breaking out of the previous weekly wick zone, 123 pips. Those of you watching, if you can't day trade, scalp trade, you've got other things to do, but you still want to trade, just look at the weekly and monthly wick zones. You could put your pending orders there. They're almost set and forget. You could have an alert when they trigger, and then you can see whether or not you have an opportunity to take profit. And the daily, it broke out of that wick zone too. You can see here at the moment, 47 pips below. As far as the range, 1, 2, 3, 4, 5, 6, 7, over 100. The range being the current daily high minus the current daily low. Looking at the buy zone, you can see we had the pivot of the open, so there was a long bias, meaning we would have ignored this trade, looking for this signal. Actually here, taking that trade probably would have resulted in a stop out if you jumped in there, right in that Australian New Zealand session, waiting for the Asian session. You had a long trigger here, profit to be taken there. And then you can see here now, since the pivot has been filled, there's a valid short, and you can see what happened next. Rats, Larry live trade right here, long trigger 126.74. But as you can see here, all the biases are short. So right now, let's wait and see what happens. And as we've been watching, it's already dropped 5 more pips towards that daily low. Once again, we took out that daily pivot. And you can see here we had a missed pivot the other day, but we took care of that. There was that missed pivot earlier in the week, but you can see it got hit. Oh, one more thing about the pivots. You can see we hit the monthly S1, the weekly S2, and we're approaching the weekly S3. Simple trading, price action, last one. 3 ball at the bottom, green at the line. That was good for 1, 2, 3, 4 times 10, 40 pips. Taking that trade would have been profitable. And you see, we show this every day. And something that's, I guess, I figured out. I was watching that Dan Locke. I watched another one of his videos. And he says that he was talking about sales and that, you have to have this really, I forget the word he used, but basically a compelling or dramatic demonstration to show people. But thing is, see, I'm not really selling anything. People always try to say I'm selling indicators when I'm not. If I wanted to sell indicators, I would have gone about this so differently. I'd have a big company. I'd be shooting out emails. All I ever did was go on forums and just try to share the information. But I'm trying to think what has to be compelling, and I've got a few ideas, but if anything you guys can think of to say, hey, yeah, you know, TRO, if you did this, if you showed people that, yeah, they would flock. Because I'm just trying to somehow convince people that you don't need a bunch of wiggly, squiggly lines all over the place to trade. Speaking of not needing wiggly squiggly lines, looking at the previous days, the 5 lines, low, close, mid, open, and high, you can see price action at these lines trading with candle color. And once again, the wick zone very profitable. And for those of you just starting out in trading and you wonder which ones to use, normally I say, well, you can do the buy zone. You can do the rat zone, but I'm really starting to think probably the best one for you to do, if I was going to just pick one, if I only had to be able to use one of my systems or all the methods out there, I think I would go with the wick zones on the daily and weekly and monthly. Because see, the wick zones are transferable. You can use them on any time frame, but if you learn to trade using the wick zones, it'll help you with your timing, and you might not want to go use any other method. You can, all you have to do is wait. You see where your triggers are. There's your long trigger, there's your short trigger, and the stop loss is just on the outside of the other side. It's real simple. You get action every day. Some days a little more action than others, but usually you can, like if you had that long trigger here, there was a profit, and the short trigger there was a profit. It's just really hard to beat the wick zone because we know price leaves the wick zone about 70% or more of the time. And here we've got the holo set up. As you can see, it put in a low. It gave you a couple of buying opportunities there. So I don't know. Is that compelling? Let me know. Okay, we had a long trigger here, a couple of short triggers on the inventory retracement. We had a daily and a weekly. And you can see how strong that signal was to take that short. I don't know if anybody's, I think a couple people have, that's what they were looking for. So I think if anybody's out there is using these, let me know. I know there's one person that was using the daily and they seem to like it. And once again, simple horizontal lines, previous day, week, and month. Candle color at the line again. And those of you wondering, why are some charts with a white background and I use black and white candles, and some with a black background and I use red and green candles? Reason being is I want the difference so I don't get locked into a certain thing, because if I'm always looking at the same thing, I'm going to probably keep seeing what I'm seeing. But if I switch over to a different color, then, my eyes are going to have to adjust. I'm going to have to go think, white, black instead of red, green, even though it's kind of seamless, but it's still different. And I might have an aha moment on the one. So that's why I do that. And I think it also helps with the eye strain, especially if I'm going to be in front of the computer all day and half the night. Okay, Einstein line. Somebody was asking about the Einstein line and said, hey, you know what? It's not moving. It's not changing. Well, it's not supposed to. See, the whole idea, why I even call it Einstein, is it's price relative to when you open the chart and you started looking at it. So you can see right here, what did price do relative to when I opened the chart? Well, it went up just a bit, and now it came down. And you can see that. So right there was a short trigger. See, almost had a long trigger, but Now, almost isn't good enough because we don't want to rush those trades, but we had this short trigger here, and you can see it's good for a handful of pips or so, about 6, 7 pips at the moment. So remember, so when this doesn't change, it's not broken, you don't have to fix anything. This is the way it was intended. Now, if you want to refresh your chart, change the time frame, then the line will change. So if we come back to M1, so now we've got a whole new Einstein line. It's relative to when you first open the chart. So I hope that clears up that. Something I want to show everybody, because I've been talking about it, I think this week, I think maybe also last week, was these, remember I told you we had a inside bar on the month, and we had an inside bar on the week, and then, a few days ago, we had an inside bar on the daily. Do you see what price has done? Like I said, this was an experiment. I hadn't run any frequency distributions, but once again, it was something I saw, so I wanted to start testing it. And you can see here, we took a short there, and took a short here at the weekly inside bar, monthly inside bar. So at the weekly, you're up 118 pips right now. At the monthly, you're up 85, and at the daily, you're up 163. So once again, where I got this idea was using the fact that, the inside bar trade, a lot of people use it on the hourly candles, but I thought maybe if we took it up to the higher time frames, there might be something there. And obviously, in this particular case, there was. And also, on that vein, I was looking at, this is the H4 time frame, but we're looking the first day of the month and the first day of the week. So you can see here, using the first day of the month as an opening range and the first day as the week as an opening range, that price seems to expand out of those. So you can see here at the low, this is pretty much a one-way triggers the way I'm trading it. So at the low you short, and at the high you go long. So right here, these shorts were proven to pay out. So right here, this short was worth 124 pips, and the short on the month was worth 193 pips right now. So once again, if you can't sit in front of the computer all day, every day, you can use these levels, put your pending orders there, and then once they trigger, then you can start monitoring the trades. But it seems like these trades can be highly profitable. But you can see here, sometimes there's a little and sometimes there's a lot. Once again, using your money management, maybe you can't have a stop this far, because maybe even at 0.01, lot, you can't sustain that. So you have to, once again, trade accordingly. So so maybe if you can't go that far, maybe you can set it up. Maybe you just want to grab a couple pips just to test it out. Hey, maybe this thing's good for 3 to 5 pips every time you do it. And this is just at the H4 level. So it's something to consider. So anyway, I hope everybody's had a great week. I don't know how much I'm going to post between Christmas and New Year's. So everybody, you have a very safe and happy holiday. And just remember, it's not what you trade, it's how you trade it. So I hope you had a great week draining the banks, and continue draining the banks next week.